Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Palantir Technologies, ticker symbol PLTR. And so Palantir closed the week at a price of 24.44, closing the day on Friday, February 16th, up pretty significantly over the past couple weeks, but over the past week, it was basically flat, going up only about 0.25%. Here we are looking at the weekly candles. And yeah, so I just want to, in this video, compare kind of the run-up that we've seen recently following the most recent earnings report with the previous earnings report in the run-up and the drawdown that followed. And so if we do look at these weekly candles, one thing that does stand out to me as, in all honesty, potentially bearish, is that we see these two big wicks up here, whereas following the last earnings report, we saw closes for the 2 weeks following the earnings report release near the top of the trading for those weeks. But we don't see that here. Also, if we do look over at the daily time frame in a minute, we'll see that the RSI was pretty overbought. So I do think that, it has overheated. I don't think it's cooled off enough just yet. I do think it is nice that over the course of the week, a higher high was put in at $25.53. Also, that we did close the week a few cents above last week's close. Last week we closed at $24.38. So yeah, just 6 cents higher. I think that the real key, though, would be if we would have closed higher than last week's high, which was $25.11. We did hit a higher high, but I do think that these are signs that we will be seeing a pullback. I do think that we could most definitely see a continuation, but I do think we need to see a pullback first. And I think that is really clear looking at these weekly candles with those big wicks to the top side. Also, it does look like the close for the week was near or below the halfway point for the weekly trading. So that could suggest, that there is starting to be some weakness in the price action. So yeah, I do think that we'll definitely be seeing a pullback. And so yeah, I'm just going to switch over to the daily chart so we can look at some levels. But first, before I put up the drawings, I do want to point out, since we did see this drawdown, so that would be on Tuesday, and this bounce, it is quite possible that we could be seeing a double top here, and that we will be seeing, like I've said, a retracement over the next week or two. But yeah, just looking at the individual candles for the week. So last Friday, we did see this red day, a little bit of a pullback. On Monday, February 12th, we did see a run up. But then the following day, Wednesday the 13th, we did see a pullback closing within the previous day's candle. So I do think that's good. Also showing this inverted hammer candle, suggesting that there would be a reversal. And then we did get that on Wednesday. But then following that, we saw another hammer candle, that being following this run up, suggesting a reversal. And so, it is quite possible we could just be seeing a back and forth with these hammer candles, just kind of waxing and waning around this level. But, I do think it is definitely looking to be getting a little bit exhausted. The RSI at the start of the week was 80.57, so definitely overbought, a little hot, needing to cool off. And we did see that. And so now it is currently at 69.37, so just below 70. But, while that might be out of the overbought territory, I do think it needs to cool off just a little bit more before we can see rallies higher. And so, yeah, I'm just going to throw up the drawings. I did add a little bit to what I went over last week, but I also omitted a lot of levels that I don't really view as too important, at least not in the near future. And so all of these lines are for the most part, based on retracements. I did add a couple more, one being this line at $17.87, that being the high before the gap up. So I do think that is a level that we might be returning to. However, I do want to note that following the last earnings report, this gap was formed going down to $14.96. And as I mentioned in last week's video, I don't expect us to be coming down to $16. So I do think this gap may be left behind forever. And so it's quite possible 1787 will be as well. But I do think there are some levels that we could be pulling back to that I think will serve as good guides. One of those being the high here from this retracement at a price of $18.41. I do think that could be, a level to consider if price does start to come down that much over the next couple months. Maybe it doesn't get down exactly to fill this gap, but this could be a nice level to consider. And then going up just a little bit higher in that retracement is the 1618 being at a price of $20.84. And then going up to the next one, the 2618 at $24.77. So prior to earnings, I did actually get a very small position in Palantir. And following Monday, this was the level that I decided to exit my position because I do feel like there will be a pullback. I do think there's a nice level to add back in. And so that's what I plan to do. We got an attempt at this orange level from this retracement here, and that is the 1618 at a price of $25.68. We were just shy by about 15 cents from that level. It's quite possible that we could hit it, but it's also quite possible that 25.53 is the top for the time being. And then the next retracement that I have over here is this purple one. And from that, you can see this level at 22.10. That is the 2618. And so I do think that, I mentioned in last week's video, we could be pulling down to around $22. That was the highest level based on all of these Fibonacci's that happen to have levels around $22. So I do think if it does go down to 22, that could be a nice entrance level. I do have this yellow retracement, which is similar to the one that I had up last week that I did at the end of the video. I just extended it up a little bit higher because last week the high was 25.11. Now it's 25.53. So that is the top of this retracement. And so the one level that stands out to me from that is the 236 at a price of $23.29. And so that would really be based on, if we were to retrace and test the top of this dashed line based on these two high pivot points. If we were to retrace to that dashed line, I do think $23.29 could be a good entry point, and so that's kind of my plan. Although with this dip that we saw in the process of forming this double top, the low on February 13th was 23.31, so it's quite possible that was a test of this level. And, we may not be seeing that pullback, or maybe, that pullback's already happened before moving higher. And so you might see at the very top, I do have a line drawn at $27. Also, I do have this other retracement that goes towards the bottom. This was the after hours low during the earnings report. And so with a retracement from the top here on January 22nd down to the bottom there, that could suggest, looking at the 2618 extension, that price could go to $27.31, which does line up with this purple line that I've drawn at $27. But I do think, like I said, that we will need to see a pullback before we could get up to that level. And then if we are looking at the previous trading following the last gap up from the last earnings report, we can see that, yes, closes were pretty near the top of those candles, whereas over the past week, we've seen candles with pretty big wicks, some of them, especially, on this pullback. And when we hit the high, we haven't been able to close above the wicks that we've been putting in. So, I do think that we will be seeing a cool off next week. But again, last Friday, we saw this red day and then a move up, hitting a new high. I do think that with this red candle on Friday, February 16th, it's quite possible we could see a move up on Monday, but that could also be followed by a pullback potentially to $23 or $23.29. So those are just my thoughts on those levels. But if we do take kind of a step back in time to look at where that purple line originates from, that is really, based on, these peaks that started to form beginning in the middle of March 2021. We saw multiple tests of 27, but ultimately, we were rejected from that level before coming down. And so it's been, that the last time we were at $27 was November 2021. So, it's been more than 2 years since we've been at $27. And so I just think that if we do get up there, there could be a lot of resistance because there are potentially a lot of bag holders up here just waiting to offload their shares. And if we do look at the volume profile, it does suggest that there, was a lot of trading consolidation up here. And so we could be at right around resistance. So I do think that $27 will be a tough level to hold if we are able to get there. And I do think $23, maybe $22 could be a good dip buying opportunity before we get there. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.